Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here alongside Damian Sassower. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast, our first of the year, with Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, Bloomberg Radio, Quick Take, as well as on YouTube to parse the most crucial moments of the day. And hey, I spent a whole week locked in a room with Tim and Carol last week and actually lived to tell the tale here. Actually, it was a wonderful time here. Actually, wasn't a lot going on last week. A lot going on today, though.
I was wondering why you look so amazing. It must have been all the time with us, Romaine. Having said that, we've got some names gaining today. So it's not like investors are running for the exits on everything. And we did see some buying, I want to say about an hour ago. We finished off our lows. Does that mean some optimism? I don't know. I'm going to wait till we get through those Fed meetings and the jobs report on Friday.
People make a big deal about getting a new planner, turning over the last page of the calendar, getting that new page a day, Damian. But at the same time, as David Dietz from PPAC Private Wealth just reminded us, it's a new calendar year, but the same problems plague us. The concerns over inflation. We don't yet know what's going to happen when it comes to a recession. So even though it's a new year, the same problems are ahead.
Yeah, and if you just look at some of the price action today, you look at consumer durables, you look at names like Ralph Lauren, Whirlpool, D.R. Horton, Nike, all pretty big gainers on the day. And so look, again, this for me shifts back to the consumer, which sectors in the equity market are going to outperform in the first half of the year.
Yeah, and we should point out too, in terms of investor sentiment, stocks actually across the board open higher on the day here. Of course, that rally only lasted less than about 30 minutes before they dipped into the red. We're well off the lows of the day. That's the good news here, but nevertheless, it is going to be a close in the red for most of the major indices. The S&P 500 down about 15 points right now as we wait for these numbers to settle. No matter how it shakes out, that's going to be good for a loss of roughly about 0.4%. The NASDAQ Composite down about 7 to 0.8%, or roughly about 80 points. The Dow Jones Industrial Average, I kind of saved this for last because it's still been ticking back and forth here, right on the threshold of going into positive territory. It doesn't look like it's going to make it. Down about 13 points on the day, less than a percentage point drop here on the day. We should point out Dow Transport's poking into the green right now at the close, up about 5 points. And the Russell 2000, that's lower here on the day, down about 0.6%, or about 10.5 points, Carol.
Yeah, back to the S&P 500 I go, Romaine, because kind of an even split. As I said, there were names that gained, there were names that lost ground today. 263 in the S&P 500 higher in today's session, 236 lower. But I did this for you, Damian, because MSCI Emerging Markets Index up about 0.5% today. A lot of folks are saying watch emerging markets this year.
In the face of a stronger dollar, go figure. Well, look, what's interesting also, and we haven't even talked about it, is the big loser so far year to date is Brazil, and it's Petrobras, who is a huge constituent within that index, Carol. So, let's see how they perform. With Lula back in power and the populist pivot, I don't know if those gains can hold.
All right, so let's get to some of the gainers. It wasn't so easy, I got to tell you, but let me get to it. Meta. It may have been tough for Apple today, but it wasn't for Meta. This one is up about 7% or so in the past 3 trading days, adding another 3.7% to the trade today. Mind you, that was good enough to put it top in the S&P 500 and NASDAQ 100. The Texas Loomis Sales Growth Fund boosting its holdings in November, so there was a story crossing the Bloomberg today on that, and they added some shares there. But other than that, no real news to move the name. PayPal Holdings also top in the NASDAQ 100 and the S&P 500. This one was good for a gain of 4.7% in the trade today, up as Truist Securities upgraded the name to buy, citing the payment platform's net cash position of about $6 billion, among reasons to take a more positive stance. Yeah, that'll do it. And then I do want to point out IDCC, InterDigital. This one was up almost 14% in today's trade. It's about a $1.6 billion market cap wireless communications equipment company. It lost 31% last year. But the company, and I feel like this could be a big theme here in 2023, the company boosting its share buyback authorization by roughly $333 million to a total of $400 million. So this was certainly a big standout in today's trade.
And I just want to add there, too, bank stocks actually did pretty well today. JP Morgan was up for a 6th straight day. Bank of America, Citigroup, at least the big banks got a bit of a rally on today.
Yeah, we talked to Connor Sen from Bloomberg Opinion a little earlier, and we asked him his one theme for 2023. He said, keep an eye on the banks. Oh, I want to talk about some of the decliners today. Leading the S&P 500 lower today, we got Apple shares falling by 3.7%, closing at its lowest level since June of 2021. Demand issues in the spotlight today. Nikkei reported earlier that Apple has told several suppliers to make fewer components for certain products, including AirPods, Apple Watch, and MacBooks. And then a little later, Apple was also downgraded to neutral from outperform over at Exane BNP Paribas, which writes that the stock's growth outlook, quote, seems insufficient to justify a valuation premium to platform peers. Let's get on over to Tesla. Shares falling 12% at the close today, the biggest one-day drop in over 2 years. It's trading at $108.10 right now. Third consecutive quarter where deliveries came in below expectations. That's why the stock is reacting like this today. 405,000 cars were delivered, just over 405K.
But analysts right?
It was another record, but it wasn't what analysts wanted to see. They wanted to see over 420,000. The question, is it a story about the global economy, or is it more of a Tesla-specific story? We dug into that a little earlier with Ed Ludlow. And then Molson Coors, ticker TAP, down 4% today. Company was cut to underweight from equal weight over at Wells Fargo. The company, Wells Fargo that is, says the current consensus doesn't properly account for the cost of goods sold per hectoliter when it comes to inflation, and they don't see sufficient offsets when it comes to volume, price, or marketing because of inflationary concerns.
Yeah, interesting, too. We should take a look at what went on in the yield space today, guys, because we talk about 2022, of course, being the official end of that, almost 40-year bull market that we saw in bonds. And that's flipping, at least here for one day here, as a lot of people come back in. Maybe they're looking for safety. Maybe they're making a bet here that the Fed might actually be done, or at least be ready to be done here. Your 2-year yield moving lower by about 3 to 5 basis points here, but most of the activity was on the longer end of the curve. 10 basis points down on the 10-year, the 20-year, and the 30-year here on this day. Be interesting to see if the bond market, guys, which we know got it right so many times last year, whether the bond market is going to be the lead here for the rest of the cross-asset space in 2023.
Well, Romaine, you talk about income-oriented strategies, talk about overwriting strategies, talk about the CBOE buy right or the put right strategies. I mean, they were both down last year. I mean, they've only been down 2 to 3 years in the last 14. So if you're looking for income, how do you look for it? I mean, do you buy put protection? Do you write puts? Do you write calls? I think 2023 is going to be an income-oriented year. I think those overwriting strategies work. Yeah,
and I do also wonder about all the economic data points, how we are going to be driven from point to point, if you will, in terms of the trade sentiment. I think about, the jobs report on Friday, the Fed minutes tomorrow. We've got reads on ISM manufacturing. We've got JOLTS job openings. We've got a lot of stuff coming at us, and how much investors will once again, as the Fed has reminded us that they are data dependent, so do investors remain kind of data dependent as well, Tim?
Yeah, certainly my focus will be on jobs later this week. 1.7 jobs available for every person right now who's looking for work. Though, Romaine, I still do wonder, when we think about this in the context of the greater economy, why the conversation has shifted, it seems like, so quickly to this idea of the Fed either being done or the Fed actually pivoting just in the last few weeks, given that we're still seeing so much strength when it comes to the labor force and concerns over, a wage price spiral.
I think it's a little bit of wishful thinking, and we've had a couple of folks we spoke to on Bloomberg Television today who kind of got that point across, the idea that the market is really trying to time this pivot or this pause, whatever you want to call it here, and so that's creating a lot of volatility, and that's probably not going to stop, I guess, until maybe Fed Jay Powell comes out and gives another, Jackson Hole type of mic drop. But unless we get that, then it's pretty much the market going to price what it wants to price in, and that's what you're seeing.
Well, Romaine, what do you do if you're a risk-averse investor, right? I mean, do you have to invest in market-neutral type strategies? I'm talking merger arbitrage, equity market neutral. I mean, both of those strategies performed really well last year. Good luck trying to get the same type of performance this year. The verdict is still out, but my guess is, you probably want to take a more risk-averse, hedged approach in the first half of 2023.
And I do just want to point out, we talk about the economic data. This actually is a big week for economic data. But, we got a month before we get to the next Fed meeting, and obviously there'll be some Fed speak before that. But, this is really all the market has to hang its hat on right now. It's going to be the economic data points, which we're showing on the screen right now, including the PMI and ISM data and the payrolls report. But then keep in mind, you're going to get an earnings season that's going to kick off basically a mid-month as well. So you have a lot of catalysts that are going to sort of front-run the Fed, if you will, that are probably going to drive this market in a direction, whether it's up or down, who knows, but it's going to drive this market in a direction that's going to be a little bit independent of what the Fed does at that first big meeting at the beginning of February.
Yeah, that's exactly what I was just going to say, Romaine. apart from the economic data that we're getting over the next week, earnings are really what we're focused on, especially because it's bank earnings. So we get a good sort of bellwether on what the American consumer is doing and those cash balances in Americans' accounts. Because if we start to hear more warnings from these big banks about spending power of our fellow Americans, then what does that mean for the economy that is powered by the consumer?
Yeah, it's going to give the Fed a lot of information, right, in terms of that next Fed meeting. What we are hearing, certainly early on, I should say, in terms of the earnings season. I want to go back to the markets if I can, because I feel the correlation that we saw between stocks and bonds last year, right? That's unusual. And I was looking at our Markets Live blog. I mean, we're on this first trading day, Damian, we're seeing some disconnect, or kind of back to the way it maybe should be. We saw stocks down, we saw bonds moving up today, and I wonder if we start to see more of that here in 2023.
Well, I think you all make a great point about banks and about financials, but for me, it's going to be about asset quality, right? It's going to be about loan losses and provisioning, and we're going to get a lot of data on that over the next few quarters, I can assure you of that. But for me, yeah, steeper curve. If we indeed see the Fed start to cut, that should be good for the banking sector writ large.
Got a lot of questions, guys. I'm just going to say it's only the first trading day of 2023. A lot to come. All right, that's a wrap for this first trading day of the new year. Our cross-platform coverage on radio, TV, on Bloomberg Quick Take, also on YouTube, Beyond the Bell. We will see you again, same time, same place tomorrow.